Welcome back to the channel, guys. My name is Gordon Frayne. We are back with another video. Today we're talking about Bitcoin and its relationship to global liquidity. As always, if you enjoy the content, please make sure to smash that thumbs up button below, hit that subscribe button as well, and if you want to get notified about similar videos, smash the bell notification icon, and don't forget to grab your completely free copy, The Rise of Bitcoin. It's linked down below this video in the description. Grab it for yourself, 100% free, and let's go ahead and talk about Bitcoin. So, I'm going to remove this yellow indicator just momentarily because I want to talk about what's been happening with Bitcoin's price action over the past number of months. And as we can see, as we came through the period of 2024, we had a large period of sideways movement and consolidation before getting confirmation of the new administration entering the United States with President Donald Trump getting elected here on November 5th, and the markets reacting immediately after that confirmation, with Bitcoin moving from 67,000 all the way up to above $100,000, and it managed to do that essentially in a 17-day period. So we saw a huge move for Bitcoin in a 2 to 3 week period in the immediate aftermath of the election results. And from there, we did manage to go even higher and peaked up above 109K by the time we got into the first few weeks of January. However, since then, we've seen Bitcoin's price pulling back. And even in the past week or two, we've wicked as low as about $78,000. We have bounced from there. We're holding above the 200-day simple moving average here for the past 7 to 10 days as we've been retesting it. But this pullback has caused huge amounts of pain for Bitcoin holders and for altcoin investors as well, because many altcoins have pulled back huge amounts on percentage terms. Bitcoin has pulled back from the top of this wick to the bottom of this wick by over 28% in a 35-day period. And with Bitcoin pulling back 28% over that kind of period, we've seen many alts bleeding out in excess of 40, 50, 60, and even 70% in some cases. So it's definitely been a painful few weeks since the highs for Bitcoin in the middle of January. As we move through February, definitely a painful month. And I think it was the worst February for the past 10 years for the price action of Bitcoin specifically. And we're currently sitting at about 86,000 here in the second week of March, with Bitcoin holding above that 200-day simple moving average. So what I wanted to talk about today was zooming out and looking at the big picture of global M2. So global M2 is essentially an indicator that allows us to track the money printing and the increasing circulating supply of cash reserves across the entire planet. It's combining economic data for M2 across major economies like the United States, like Europe, Great Britain, Australia, New Zealand, China, Japan, Germany, France, etc., combining M2 economic data for all of those major economies and showing us how that changes over time. And if you zoom out on a large enough time frame, you will understand that M2 essentially always goes up because we're seeing the continued debasement of fiat currencies over time, and many governments, if not all of them, have their hands tied with regards to having to continuously print fiat in order to refinance their debts on a nation state basis. So what we're seeing here is the M2 liquidity mapped with this yellow chart here. And the additional context I will give is the fact that I'm using this specific indicator to show me that yellow line, M2 Global Liquidity Index, with a time shift. And the time shift element is important because what I've done here in the settings is I have offset the Global M2 Liquidity Index by 76 days. The reason for that is because what we're seeing here now is the fact that Bitcoin typically follows M2 with about an 8 to 10 week lag, i.e. that 76-day lag or offset is what I've factored into the chart here. So we can see during that period of consolidation during 2024, Bitcoin was moving sideways and consolidating, and so too was global M2. And again, we saw global M2 starting to increase by Q3 of 2024, but Bitcoin's price action didn't really start to rip to the upside until Q4. And again, what we're seeing here with global M2 peaking, again, we saw Bitcoin price peaking by December of 2024. But if I change this again, we can actually see if I turn the offset to 0 days and change it on the chart here, global M2 actually peaked out by the very end of Q3 of 2024. And you can see throughout the course of Q4, as we move through October, November, and December, that is the period, Q4 of 2024, when global M2 actually decreased and pulled back down to these levels around 92 trillion. And we actually bottomed out for global M2 here at the very beginning of January and started seeing that increase once again. But we notice, again, there is a lag between what Bitcoin's price action does and what global M2 is doing. So if we reinsert the 76-day offset and map it into the chart here, again, this is not guaranteed, but Bitcoin has historically followed global liquidity with an 82% success rate. What we're seeing, and again, not guaranteed, but perhaps by the time we do actually get towards the end of March and beginning of April, if we extend out the price action for Bitcoin, we may need to go a little bit sideways and even continue to retest the 200-day and possibly even retesting these lows to close that futures gap on the CME. We might see Bitcoin consolidating and chopping a little bit further, but, and this is a big if Bitcoin continues to follow global M2 in the same way it has been doing for the past few years, we could see Bitcoin price continuing to the upside from the end of March, beginning of April onwards. Again, you have seen a pretty nice increase in global M2 since that period. Since it bottomed out at the beginning of January, it started moving back to the upside. And again, if Bitcoin continues to follow this with an 82% degree of accuracy, we could see Bitcoin moving to the upside by the end of March, beginning of April. So I know it's been a rough few weeks in the markets since the beginning to middle of January, when we saw Bitcoin peaking, pulling back, dragging the entire altcoin market down with it. Even the majors, Ethereum, Solana, and others have been struggling with Bitcoin pulling back 28% during that time period. But again, we could be in for seeing a little bit of light at the end of the tunnel here by the time we get to the end of March, beginning of April, to see that price beginning to move back to the upside. Okay, this particular index with the global M2 indicator here on TradingView is one that you can search and use for yourself, but I had also previously built a custom formula for tracking the global M2 from about 6 or 7 major economies. And again, if I remove the time delay offset here in the settings and turn it back to 0, we can shift that back over and we can see how it lines up with the custom formula I was using for tracking global M2 across major economies like the US, Europe, Japan, China, Great Britain, Germany. And I was using the bar chart indicator here to track this up until I found this most recent indicator where I can use it to actually insert that time offset. So interesting to see just how accurately this lines up. And again, if I remove the yellow line here on the chart, we can clearly see that there has been increasing global M2 since the beginning of this year. It's up by about 2%. Again, this is not entirely global M2. This is the proxy I was using for global M2 by shortlisting those major economies I just mentioned for US, Europe, Japan, China, Germany, and Great Britain. But the trend is clear, and the indicator that I just showcased gives me some confidence that we are on the right track with understanding the movement of global M2 and how that has been changing since the beginning of this year. So again, I wanted to create this video just to discuss that pattern and correlation that we've seen between Bitcoin and global M2 with that 8 to 10 week delay or offset. About 76 days seems to line up best on the chart here. Let's wait and see what happens. Again, this is not guaranteed. Of course, there are so many different factors that play into how Bitcoin could react over the coming weeks. We've got a lot of stuff happening with tariffs, with uncertainty in the US stock market, with some of that tariff fear, uncertainty, and doubt permeating into how people are treating the S&P and stocks in the United States. So again, there's still a lot of variables at play here. We've got interest rate cuts potentially on the cards later this year, although it looks like we may not get those in March with the Federal Reserve, but possibly that happening later in the year. And also the $7 to $9 trillion of debt that the US government needs to refinance by the summer of this year as well. So let's wait and see what happens. I wanted to create the video just to showcase the interesting correlation between Bitcoin and global M2, and whether we will follow the pattern by the time we get to the end of March, beginning of April remains to be seen, but definitely something to keep an eye on. That's it for today's video, guys. Today's video is sponsored by Femex, the most efficient crypto trading and investment platform. Again, I'm going to leave a referral link for Femex down in the description of this video. Make sure to check it out for yourself. Again, this is not financial advice, guys. Always do your own research. Make sure you check out the charts, do your fundamental analysis, understand what you're investing in and what you're doing with your capital. Don't forget to do that research for yourself. As always, if you enjoy the content, please make sure to give it a thumbs up. If you got any value out of this video at all, give it a thumbs up before you leave. Smash that bell notification icon, hit the subscribe button as well. And again, don't forget to grab your completely free copy of The Rise of Bitcoin. It's linked below this video in the description. Grab it now, and we'll catch you in the next one.